Wow.
Yeah, that's a big chunk of change, but it shows you how serious they are about pushing the boundaries, particularly in AI.
Yeah, it makes sense given that whole pervasive AI strategy they're talking about, putting their money where their mouth is. But R&D is only one piece of the puzzle. What about cash? Do they have the financial flexibility to do all these acquisitions and keep investing in growth?
As of December 28, 2024, they had $5.1 billion in cash equivalents, and short-term investments.
Okay.
Down a little from $5.8 billion at the end of 2023. Probably due to those acquisitions and the stock repurchases we were talking about.
Oh, right. They did return $862 million to shareholders through those buybacks in 2024. That shows they believe in their own stock, which is always a good sign.
But absolutely. Confidence in the future. But let's not forget about debt. Can't just spend without considering what you owe.
Right. Too much debt can be a bad sign. So what's AMD's debt situation looking like?
Their total debt actually went down from $2.5 billion on December 30, 2023 to $1.8 billion on December 28, 2024.
Okay, so debt's decreasing.
Yep.
They've got a healthy cash position, and they're investing a lot in R&D. Overall, the financials seem pretty solid. But you mentioned earlier that AMD's revenue recognition, the way they actually book revenue, can be complicated. Why is that such a big deal?
Yeah, revenue recognition, it's not always as simple as it sounds. When a company records that revenue, it can really impact their financial statements. Could even be misleading if it's not done right.
Okay, so how does AMD do it? And why is their approach so, I guess, complex?
Well, it's partly because of their diverse product portfolio, different sales channels, different everything, creates a more complicated revenue picture. So for their standard products, like those CPUs and GPUs sold through distributors, revenue is usually recognized when they ship to the distributor. But there are conditions, like there has to be a firm order and, reasonable assurance they're going to get paid.
Right, it would want to count the money before it's, actually in the bank. What about when they sell directly to those big OEM customers?
For those direct sales, revenue is recognized when it's delivered to the customer. Same idea with the firm orders and payment assurance. But it gets a bit trickier when you talk about those custom products, especially in the gaming world.
You mean like those chips specifically made for gaming consoles?
Exactly. Instead of recognizing all the revenue at once, they spread it out over the whole production period. It's called revenue recognized over time. Makes sense, because those custom product cycles are way longer and more complex.
No. Right. Wouldn't be accurate to count all the money up front if it takes months to actually build the thing.
Yeah.
But this isn't just about custom products, is it? You mentioned intellectual property, too.
Yep. Sometimes AMD will sell or license their patents, their intellectual property. For those deals, revenue is recognized when the customer gets the right to use the IP, regardless of any, physical delivery or production timeline.
So they have to figure out when the customer can actually benefit from the IP, then recognize the revenue.
Right.
That's interesting. So many different ways to do it depending on the type of transaction.
Exactly. And it really highlights why it's important to understand these nuances when you're looking at their financials. But revenue recognition, it's just one piece. Let's talk about how they value their inventory. That can have a big impact on their profits.
Inventory valuation, that sounds kind of like technical accounting stuff. Why is that so important?
Well, inventory is a big part of their assets, right? And how they value it directly affects their cost of goods sold, which then affects their profitability. AMD uses the principle of valuing inventory at the lower of cost or net realizable value.
So whichever is lower, what it costs them to make it, or what they realistically think they can sell it for. Why is that the approach?
It's all about being cautious. The tech industry changes fast, new products, old stuff becomes obsolete, and demand goes up and down. All of that can make inventory lose value really quickly.
So by being conservative with their valuation, they're acknowledging those risks, protecting themselves from overstating how much their assets are actually worth.
Exactly, and make sure their financials are giving a realistic picture. But sometimes, even with the best predictions, inventory can lose value. And that's when you get inventory write-downs.
Write-downs, what does that mean?
If they realize that their inventory is worth less than what's on the books, they got to take a write-down. That means reducing the value on their balance sheet and taking an expense on their income statement, which, can hurt their profitability.
So it's like admitting they messed up the valuation.
Kinda, yeah. It shows that some of their stuff isn't worth what they thought. Could be for lots of reasons, like it becomes obsolete, demand changes, or even if the inventory gets damaged. Remember that incident we talked about earlier?
Oh, right. Yeah, it's a reminder that even the best companies can run into these unexpected problems.
For sure.
Managing inventory is tough. Got to have enough for the customers, but not so much that it becomes a problem.
A balancing act, for sure. But let's shift gears a little bit, talk about something else that's important but often gets overlooked. Goodwill.
Goodwill. Isn't that like something you see on greeting cards? What does that got to do with a tech company?
It's a big accounting concept, especially when companies do a lot of acquisitions. Remember all those companies AMD's bought? Xilinx, Pensando, Silo AI.
Yeah, those are some big moves to boost their AI game.
Right. So when AMD buys a company, they often pay more than what the tangible assets are worth, like the buildings, the equipment, that kind of stuff. That extra they pay, that's often because of intangible assets like brand recognition, customer relationships, intellectual property, a skilled workforce. All that gets recorded as goodwill on their balance sheet.
So goodwill's like the value of things that are hard to measure but still matter for a company's success.
Exactly. It's the potential for future earnings, future growth that AMD sees in these companies they're buying. But unlike a physical asset that, wears down over time, goodwill isn't automatically reduced each year. Instead, they got to test it for impairment at least once a year.
Impairment meaning?
It means they got to check if the fair value of that goodwill is still lower than what's on their balance sheet. If it is, they got to take an impairment charge, which is a non-cash expense that reduces the value of goodwill. And that can make their profitability look worse.
So basically, it's admitting they maybe overpaid for a company or that those intangible things aren't as valuable as they thought.
Could be, yeah. Figuring out impairment involves a lot of judgment, a lot of estimations.
Sounds complicated.
Yeah, it's a tricky area. Investors need to pay close attention to how companies are handling these things, what assumptions they're making.
Okay, so we've got revenue recognition, inventory valuation, goodwill impairment. Anything else in AMD's financials that we should be watching out for?
One more thing. Income taxes. AMD operates all over the world. Different countries, different tax laws, different rates. That makes calculating their income tax expense pretty complex. Can even cause some big swings in their effective tax rate from year to year.
Yeah, I bet their tax team's got their hands full.
Definitely a challenging area.
Yeah.
Investors need to watch how companies like AMD manage their taxes, what assumptions they're making about future tax rates.
Sounds like there's more to AMD's financials than meets the eye.
Oh, yeah. Definitely. But by understanding these key things, you'll have a much better grasp of their financial health, better equipped to figure out their future prospects.
All right, welcome back. We spent a lot of time talking about AMD, their business, their competitors, their plans for the future. But we haven't really talked about what this all means for you.
You're right. We need to connect all the dots and kind of look at the big picture.
What we've seen is that AMD is a company that's moving, shaking things up, constantly innovating and changing with the times.
Definitely. They're not just some hardware company anymore. They're becoming a real solutions provider.
Yeah.
And their focus is clear. AI.
Yeah, that pervasive AI strategy, it's a bold statement. But they're backing it up with real action. Buying Silo AI, ZT Systems, that shows commitment.
And their financials, they're strong. They have the resources, the knowledge to go up against the big guys.
Yeah, that revenue growth is impressive. They're making money, and they're not afraid to invest in R&D, which is so important in this industry.
But we got to be realistic. The tech industry is full of risks. Things change quickly. New challenges pop up all the time. Even your own customers could become your competitors.
It's a fast-paced game, and nobody can predict the future.
That's why it's so crucial to stay informed, to keep learning about companies like AMD. Don't just take our word for it. Dig into those financial statements. Follow the news. Make your own decisions.
We've given you the tools and the info to start exploring.
Think of it this way. We've given you the map. Now you go on the adventure.
Exactly. And as you learn more about AMD, ask yourself, what's going to drive their success in the future? Is it going to be the hardware? Or is it going to be building a really strong software ecosystem?
That's the big question. Both hardware and software, they're essential pieces of the AI puzzle. Finding that balance, that's what's going to be critical for AMD.
So keep learning. Keep asking those questions. That's what makes you a smarter investor, a more informed person.
The world of tech and business, it never stops changing. There's always something new to learn.
That's right. Thanks for joining us on this deep dive into AMD. Until next time, happy learning.